All right, everyone. Well, welcome to our second edition of the Financial Fitness Virtual Power Hour. The first one was on personal taxes. We had Brother Heyman give us a great knowledge-based conversation on important information for personal taxes. Obviously, it is currently tax season. Brother Heyman definitely gave us, Brother Elder Heyman gave us some fantastic information on that. But also because it is still tax season, with the kind of final day being next Monday on the 15th, we want to make sure that we also talk about the other important aspects of taxes, which is your business taxes. So for people who are currently online and for the people who end up watching the recorded version, my name is David Clary. I am the Health and Wellness Committee Chair, and outside of providing wonderful physical health and focused on physical health, we also want to focus on other aspects of your health and wellness, which is your mental wellness, but also your financial wellness, which is or your financial health, which is why we are here today. We have Brother Eldon Heyman, who has been in the field for 45 years. I'm experienced with personal tax and accounting services. He boasts a long career as a finance executive in the Washington, D.C. area. He is an expert at analyzing the needs of each client and providing personalized financial solutions. His dedication to hard work has earned the respect of the business and financial community in the DC metropolitan area. Brother Heyman is heavily involved in the community and lends his service to local nonprofit organizations. Most recently, Eldon has expanded his range of services to include real estate. Fueled by his passion as a previous investor and his pure entrepreneurial spirit, he was able to secure recognition for being the overall top seller for several years at his respected real estate firm. So without further ado, I am going to go ahead and bring in Eldon Heyman. I'm going to pin him, and I'm also going to share our screen for today. Now, just more or less some house rules, if you will. While we are having this conversation, I would love it if you all just keep your videos on mute for the time being, of course. And if you do have a question, even during the during Brother Heyman's talk, just put the virtual hand up. I feel like the AI, if you just raise your hand, I feel like it's going to raise the hand. But regardless, if you make sure, if you do have a question during his presentation, during the questions that I present, please make sure that you raise your virtual hand so that we can get to you after he's done with the presentation. Try not to interfere with his information, his vital, important information. So like I said, without further ado, we are going to start ourselves off with the first question. And that is the basics of business. Ultimately, we all know with business, there are for-profit and there are nonprofit businesses. And so I really just kind of want to, Brother Heyman, have you highlight what really is the difference between the two for just business structure, whether you're getting started or whether you are part of a either one, for-profit or nonprofit organization?
Well, a nonprofit is just kind of what it says. I may be oversimplifying it, but it's a company that's organized not to make a profit. It's basically community service, churches, colleges, universities, schools, or the fraternity. A company that its purpose is not to make a profit. Normally, those companies are in community service area. And for profit, you're in business to make a profit. And that's the standard business setup. There are different types of business, like corporation, where there's a S corporation and a C corporations, LLC. There's a sole proprietor, are different types of for-profit businesses. For the most part, we as normal taxpayers, we really don't form nonprofits. I mean, Boys and Girls Clubs, nonprofit, maybe a youth sporting organizations may be nonprofit, but for the most part, there's not much. It's a lot of red tape to go through to form a nonprofit. And you just can't up and say I'm a nonprofit. You have to file and be authorized by the Internal Revenue Service to be a nonprofit.
Gotcha. Yeah, I mean, obviously, I just wanted to, I'm sure it was a pretty basic question, but even sometimes the basic questions need just a little, clarification with a basic answer, right? And it is what it states, like you said, and that definitely makes sense. And before we continue on, because actually part of what you stated is going to go into the next question. Do I have any questions from anybody currently here who just that has any specifics on the nonprofit versus for-profit? Okay. So we're going to move on into actually the next question, which kind of what you elaborated on just slightly. With for-profit, we're strictly talking about for-profit businesses, and there's multiple types, from corporations, like you just said, to LLCs, to even sole proprietors in a way. Even though it's still business at the end of the day. It's not like, I'm sure, a corporation, but obviously I'm sure you can elaborate even further on that. But I guess if you can kind of just break down the S or C corporations, that those have been kind of weird to me in my own personal understanding. But if you could just kind of break down, I at least start with the S and C corporations. And
okay, so a C corporation is a standard corporation. That's what you normally see. IBM, the big companies are normals. I mean, small companies too, but they're normal C corporations, where the corporation pays the taxes, the profit from the corporation pays the taxes. An S corporation is still a corporation, but the profits or losses from the corporation are transferred to the personal income taxes, and the individual is responsible for paying the taxes. Also, for S corporation, a lot of people don't know this, but the owners of an S corporation are required to pay themselves a salary. And a lot of S corporations get in trouble because the owners don't do that. Now, that salary could be, $1,000 or $100, but the requirement is that they pay themselves a salary. But again, a lot of people say, I want to be an S corporation, and don't really know what it means to be an S corporation. And they get in trouble because they don't follow all the rules of an S corporation. It's just similar to an S corporation is a LLC, whether it's a single member or multi-member LLC. The tax benefits are the same with an LLC as they are with an S corporation. The profit or loss gets put on your personal income taxes. With a multi-member LLC, a different form is completed. You have the LLC has to file a specific tax form, and then K1 is produced, and the income or the profit or loss gets put on your personal taxes. A single member LLC is filed similar to a sole proprietor. It's filed on your personal taxes on the Schedule C. And if you're not understanding what single member is, that means one person is the owner of the company. There's no 50-50, 25-25, 50 split, there's no split, there's only one member or owner. And a multi-member means there are more than one owner of the LLC. But the LLC, S Corp, and sole proprietor are all taxed the same way. Where the differences come in with a corporation and an LLC, I mean, they're basically the same as far as legal protection. You know, if you're sued, if the company is sued, then it's the company that's sued, not the individual owners. But you know, this is America, and if you get sued, they're gonna sue everybody anyway. You know, that's just the way it's gonna be. But that's really the only differences in corporations, LLC, and the sole proprietor. A sole proprietor is the individual. LLC and corporations, it's the corporation. But the tax benefits are the same for S Corp, single member LLC, multi-member LLC, and sole proprietor. Also, a LLC, the members or owners cannot pay themselves a salary. The way they get paid is they split the profits, and it's called owner draws.
So just to re-clarify, X corporation, you are required to pay yourself through whatever payroll payment service there is. You're saying you are not required, or it is not a requirement to for the single member or the multi-member LLC to pay themselves.
You cannot pay yourself a salary.
Gotcha.
It's the requirement is no, don't pay yourself a salary. Versus an S corporation, you have to pay yourself a salary. So again, the way the LLC is taxed, it's taxed on your personal income taxes. So is the S corp, but it's just a little more paperwork, a little more detail to forming an S corporation, and a little more requirements with the IRS to do it. I mean, starting off, I would always suggest go simple, go LLC. If your business expands and you're getting huge and you want to pay yourself a salary, and you know your business is just getting too big, sometimes when certain contracts require you to be a corporation, then you would go and convert your LLC to an S corporation. But starting off, I usually recommend just doing an LLC.
Okay. So I see we got a hand raised, Brother Murray. You can go ahead and ask your question.
Thank you, brothers. Brother Heyman, you were saying that the LLC, you cannot pay yourself a salary, but you also talked about owner draws. So with the LLC, several times a year, you can just take a drawdown on the money? Is that what you mean?
Yeah, I mean, it can be every day if you want to. Yeah, so my business is an LLC. And I mean, I just keep track. I'm an accountant, so a lot of people don't keep track of stuff the same way I keep track of stuff. But if you keep track of your costs, you know what your income and your costs, you know whether you're having a profit or a loss. And those owner draws are not considered expenses, so they do not. They're not a write-off. But yes, you can take those draws anytime you want to. I mean, it's kind of like being it's very similar to being a sole proprietor. You just collecting money. I mean, you should separate business and personal and document everything. But again, a lot of us don't even do that.
Right. At some point today, are you going to talk about different ways of documenting that or tools that can help you document
I don't
profit?
think I'm not sure if it's one of the questions, but what I do recommend is if using QuickBooks, it's a very easy software. And I keep on saying something is easy because it's easy to me. It may not be easy to everybody. I'm sorry. But QuickBooks is user friendly. That's a better word. User friendly software, and you put all your you document your income, you document your expenses. At the end of the year, you run a profit and loss, and it shows you. Or anytime you can run a profit and loss, and it shows you where you are at any particular time. If you don't want to purchase the QuickBooks software, you can just create a spreadsheet. Uh, some of my clients, I give them a sample profit and loss statement, and they can just drop everything into that Excel spreadsheet every month, and then at the end of the year they have where they are. So it's either QuickBooks is ideal, but a spreadsheet is also good.
Thank you.
Yeah, I could definitely attest. For my fitness business, I use QuickBooks, and it's definitely user friendly for somebody who's not an accountant. Just to kind of connect my business account, my business bank account, and my business credit cards and stuff like that to the QuickBooks software, and I'm able to kind of see all the things, profits and losses, and all of that. So yeah, definitely add on to what Brother Heyman said. QuickBooks is definitely a very, very reliable source. I don't really know of any other. I'm sure there are some out there, but I haven't really used them, so I can't speak on that.
Yeah, QuickBooks pretty much got it locked down right now. They just make it so easy. I mean, you can even, I'm not sure if they have a mobile app, but they have an app where you can track your miles and your mileage. And I think that mileage will somehow get into your QuickBooks information.
Is QuickBooks a one-time payment, or do you pay that annually?
So you can pay it monthly, annually. They have QuickBooks Online. You can buy the desktop version, but I use both. For my personal, I use the desktop version. Most of my clients use the online version, and that's so I can have access to their QuickBooks file. But so QuickBooks, they do updates every year. So like I have QuickBooks Desktop 2024, I think, but next year is going to be 2025. And then maybe by 2028, they'll send out an email saying we're not going to support 2024 anymore. And then I'll just go then and buy 2028. So I had 2020 and I just bought 2024 because they said they're going to stop supporting 2020. So, and it's, I think I can't remember, but I want to say it's a couple of $100 a year. If you buy the desktop version, it's a couple of $100. And then, 3 or 4 years from now, you'll just pay another couple of $100 versus the online version, maybe $50 a month, something like that.
Thank you.
Yeah, to continue to further add on to Brother Heyman, they do have an app. They do have an app for your phone, on your phone, which yes, it does check your mileage when you are driving. From what we learned from last meeting, you have to correct me if I'm wrong though, you have to make sure that you are recording from your office or your place of business to your other session, or in my case session, or your other work that you are doing. You can't record like going from your home that is not recorded as your office to the other place of business. If
Right.
I'm sure you can clear me up with that.
Yeah. So, like, I have an office in Largo. I can't claim my mileage from home to my office in Largo, but I can claim if I go to the store, buy supplies or go visit a client, I can claim those miles, but I can't claim it's just like going to work. You can't claim mileage from your home going to your office where you work. So it's the same thing, unless your office is your home and you're going to meet a client somewhere or going to buy supplies somewhere, then you can use those miles from home to wherever you're going. But if you have an office outside of your home, you are not supposed to claim those miles going from home to that office. You heard I say not supposed to.
Yes, right. Yeah. No, but I think that's a pretty important note for people who are like myself, or just like if you're new, trying to start your own business, making sure that you claim your place of, like, especially if you have like a space in your home, you claim that, I guess on your taxes. I'm sure you can talk to Brother Heyman further about that, but like claim the your office space, part of your office space in your home. And I believe, like, when I was filing my taxes, like you can't like share that space with another person or something like that.
Not supposed to, right?
Not supposed to, right? Not supposed to. Um, but I think so. Yeah. So just to put that in note, of course, like making sure that you are aware of that when you are filing the taxes. If you like, you claim your home, claim your office space in your home, so that you don't have to accident, like, some, just in case something goes on, they don't accidentally um try and come back at you and saying that there's too much mileage going on. So yeah. So any other questions about this question? I know we kind of went on a slight little tangent, but it was kind of all related. But any further questions about this that we've been talking about? Okay. All right. So we're gonna move on to the next question. Um, so we're still staying on the for-profit example. But so let's say that obviously whether you just get started or you've been holding your business for a long time, and you begin to kind of show profit one way or another. Within businesses, I feel like it's recommended. You can obviously confirm that with me, but I believe it's recommended to state like estimated taxes, pretty much how much you expect to make for the upcoming year. Is there a certain amount of profit or of income that you have when you have to start estimating those taxes? Or like even if you're showing loss, do you still have to estimate your taxes?
Well, I mean, if you're showing a loss, then there's not going to be any income to be taxed. But there are several ways you can do it. So one way to do it is based on your previous year's taxes. So, like, when you're doing your taxes now, if you think your situation is going to be relatively the same for 2024, then you can base your estimate on that. And there are different ways to pay those estimated taxes also. If you are employed, like if you have a regular job and have your own business, or even underpaid on your regular job, you can over withhold on your job to pay those taxes. And then, so at your job, you fill out the W-4 form. This is what I suggest to my clients is, no matter whether you marry, got kids, buying a house, whatever, my suggestion is put single and don't fill anything else out on that form. Just put single. Check that one box that says single. That's it. And then there's another box that says additional amount. So let's say this year when you filed your taxes, I'm using easy numbers, say you owe $2,600. So on that additional amount line, I would suggest you put like $150. That way, and if everything is going to be consistent in 2024 as it was in 2023, that way you're going to have that extra $2,600 come out of your paycheck throughout the year. So it's easier to have 100 or 100, well, I think it may be easier to have $100, $150 come out of your check every 2 weeks than it would be to write a $2,600 check when you file your taxes. That's one way to pay estimated taxes, is just to over withhold on your job. The other way is, again, if when you file your taxes, you see that you owe $2,600, then you divide that by 4 and you send in that amount every 3 months to IRS. And as an estimated payment for 2024, you can also make it automatic payments through IRS, that they will automatically deduct that amount from your bank account every 3 months, from IRS and the states. And again, so I have a few clients that well, that's what we do. Before they were mailing checks in, sometimes the check would get lost or misapplied. But if you do things electronically, it's hard for them to misapply it. It's definitely not going to get lost in the mail. So that's just a suggestion that I've done for my client. Those 2 suggestions is over withhold on your job if you have a job, and if you don't have a job, then just make the estimated payments, whether it's automatic or mailing it in. And you can also just go online and make the payments too with the various states and IRS. But the automatic feature, you don't have to remember to do anything. It's just going to happen.
Definitely good to know. So just to re-clarify, ultimately, so when you estimate taxes, that takes away the burden of paying
lump sum.
the bulk
Yep.
lump sum of whatever it is during the tax, when you file your taxes. On top, potentially, hopefully, you will make more profit, so that could also take a little bit more burden off.
Right.
On whatever your profit is at that next file.
Right. And if you overestimate, it's just like you'll get a refund.
That was the next kind of question I was going to ask. Like, if you
Yeah.
do overestimate, so you will get some of that money back.
Right. Or you can get it back, or you can apply it to the next year, or a portion of it to the next year.
Gotcha.
Okay. It's just, basically what we do when you're at your job, when the money comes out of your paycheck, that's just estimated payments.
Mm-hmm.
That's all it is. It's just they're just processing in a different way. And then at the end of the year, when you file your taxes, you either owe more or you get some of that money back. So it's the same philosophy, it's just how you get it to the taxing authorities.
Curious though, is there like,
no?
Can you?
I was just answering the question, Brother Murray just asked.
Oh, okay, yeah.
Well, it depends. That's a loaded question. It depends on how much you may have. Oh, no, they don't. But when they will pay you interest is, let's say you do your taxes. Let's say you file your 2023 taxes in November or December of this year. They will pay you interest on your refund then. They're not obligated to, but sometimes they do. They'll pay you interest if you file late and do a refund. They're not obligated, but they do it. But and the reverse of that is if you owe, they're gonna want their interest. So, if the government is the biggest gangsters out here, they're gonna charge you interest if you're late, but they're not gonna give you interest if they owe you.
So ultimately, it's best to at least estimate, even if you really don't have a definite answer. If based on what you did from the previous year, even if you don't have a definite answer, it's best to estimate
based on the previous year.
Yeah, than to not estimate at all and wait till the following year.
Yeah. I mean, it's for the most part, we're pretty consistent. Our incomes are pretty consistent year to year to year. And you know if something extraordinary is going to happen, or if your business is getting ready to just, blow up and have crazy income. So, or additional income. So you would know, especially if you're keeping good records and you have your tax preparer is open to you throughout the year and giving you advice, and you'll know where you stand.
Does the IRS put a red flag up if you overestimate too much?
No, I mean, an example is I overestimated way too much this year, and I got my refund back.
All right.
So, but no, they don't. No. Because you're paying now. I mean, it's just like money. Again, if you over withhold, you're gonna get your money back. It's just a different way of them getting their money.
Yeah, I got you. Okay. Any other further questions from people, from anybody here?
I have a quick question. Brother Heyman, when you said that you would just put single on that line, what were you referring to when you said single?
So on the W-4 form at your job, you fill out your name, social security number, and all that stuff. The first box says, what is your filing status? Your options are single, married at a higher single rate, or had a household. I always suggest just single. And I think then, wait, actually, I have the form right here. Let me look at it. Just to be more.
In my case, I filed jointly with my wife.
Yeah, but that's only at your job. That doesn't matter. It doesn't matter how you file when you actually file your taxes.
Gotcha.
So yeah, it's letter C. Oh yeah, the box says single or married filing separately. The next option is married filing jointly, and then the next option is head of household. I always suggest just check the single box. And then there's a box in step 4 that says extra withholding. And that's where you would put additional dollar amount that you would want to come out. Everything else, 0, or draw a line through it. Because if you start following the instructions on the form and putting in all these amounts, guaranteed you're going to end up on. Guaranteed. I've see it every day. Because of the way the new tax laws were generated, or what Trump did was they made the laws so basically so the government is not paying us back. They want us to break even or pay them at the end of the year. So they changed a lot of stuff to make that happen. So I don't know if you just think about it, if you look back over maybe the last 7 years, you'll notice that your refund has started to decrease. If you haven't changed anything, your refund is starting to decrease. If you were getting a refund, or if you were owing, the amount you owe is starting to increase.
And Trump. Okay. All right, so we're gonna move on to the next question. We're actually going to kind of revert back to the nonprofit side of things. And obviously, you've already stated, like, nonprofit is what it states. It's a business that does not collect profit in a way. But I kind of feel like well, I mean, obviously you can elaborate
I mean,
further.
there are some very huge profitable
Yeah.
nonprofits.
Like,
So what happens? So nonprofits, they file a tax return. It's called a 990, and basically it's information return. And so when they don't, so their earnings or their equity or their profit is basically, it's called equity. It's just funneled back into the nonprofit. If a nonprofit goes out of business, then the assets of that nonprofit go to the government, basically. So there is a tax filing, but it's an informational filing. They don't pay taxes. It's just filing the information of, what is the purpose? It's a lot of paperwork. What is the purpose of the business? What are the projects you've done? And everything is public. What are your top 5 paid employees? Who are your board of directors? There's a lot of information that is provided on that tax return, and it is a public document. So that's it. I mean, I mean, you really wouldn't form a nonprofit unless you're doing some type of, service, community service, or health and wellness, or something that you're not. I mean, I don't really know how to explain it, because you're not in business to generate a profit. You're in business to serve. And again, when you apply to be a nonprofit, they really scrutinize your application. Because I mean, it's a lot of like the AAU basketball teams. If you're familiar with youth sports, a lot of those teams try to form nonprofits so they can get grants and all of that stuff. And sometimes the IRS, will deny them because they know that the only reason that these people are doing it is to get money, and they're not doing it really to serve anybody. So
I'll follow up with Brother Murray's question. He put in the chat, are nonprofits capped on the amount they can pay their leadership?
I don't believe so, because that the NFL is a nonprofit, American Red Cross, AARP, and that's just like ones that I can think of right now. And that they get paid. The CEO of the NFL, he probably gets over $1 million. Now, I know he gets over $1 million a year in salary. The president of AARP, I'm pretty sure her salary is up there somewhere. President of American Red Cross, so I don't think there's a cap on their salaries, but their salaries are reported. So there's public information. I think there's a site where you can go and look at every nonprofit in the country's tax return. It's probably a link on the IRS site where you can look at every nonprofit tax return, and you can go, if you know where to look, you know where to go and look for that information to see how much their salary. They have to report the salaries of the top 5 employees, top 5 paid employees. Now, it doesn't necessarily mean the CEO or whatever. It's just the highest paid employees.
Yeah, that's actually very interesting. I've always been curious on that because I mean, a nonprofit does have employees, and I know, I mean, one way or another they get paid. I'm assuming is like it's strictly through grants that they
Yeah,
are.
fundraising,
Yeah.
government grants, foundation, corporations give nonprofits money. So they get their money, various ways. But fundraising, government contracts and grants, and some corporate contributions.
That even though this isn't kind of part of the question, but it is still
Membership dues.
Yeah. Um, we briefly talked about it in the chapter meeting, like the type of nonprofit that can
Yeah,
that people can like write off for like
right.
on their taxes. What I guess what is that difference?
Yeah, so it's various types of nonprofits. The most commonly known one is a 501c3. And so Washington, D.C. alumni chapter is not a 501c3. I don't know which numbers they are, but the KSEP Foundation is a 501c3. The Historic House Restoration Fund is a 501c3. There's another WAC Kappa Foundation. That's the community service organization is a 501c3. So they can solicit contributions, and those contributions are tax deductible. But as the Washington D.C. alumni chapter, contributions to the chapter are not tax deductible.
So I guess that's something that people really kind of have to even ask other nonprofit organizations when they are trying to donate their funds to that organization. Right. They have to
I mean, when those organizations solicit funds, normally they state that they are, and they should when they do it. That's part of the IRS rules. You can't state that you're something that you're not. I mean, you're not. You shouldn't state that you're something that you're not. And that's why in the frat meeting last month, it's why that came up. Yeah, because we can't say that your contributions to Washington, D.C. alumni chapter are going to be tax deductible because they're not. Now, there are ways around it. An example, this like my members, like you pay your membership dues. My membership, I'm a member of a professional organization. I'm gonna ride with that. I do it. I solicit my business through members of the chapter, so I write off my membership dues. That's one of those areas where it's borderline. But it's not a charitable contribution.
I'm not going on to that last question. I just kind of wanted to follow with what you just stated, which was onto this nonprofit. Why would a nonprofit organization not want to be like not file for that 501c3?
So it's government, it's rules, and it's because IRS rules. It depends on what the purpose of the organization is. a fraternity doesn't fall under the rules of a 501c3. It's a list of guidelines that you must fall under to be a charitable organization. And as the fraternity, we don't fall under that rule. And then there are other organizations that don't fall under that rule. An example, a church is a nonprofit, but a church isn't required to do a tax return, isn't required to do that annual filing, the information return. But they are a charitable organization. So it's just certain rules for various different guidelines that IRS set up for different types of nonprofits.
So we just had some people kind of come in and yeah, actually, Brother Murray, go ahead and ask your question.
Brother Heyman, one of my businesses is a dance school where I teach couples, well, teach everybody how to do swing dance. Quite a few brothers in Washington Alumni Chapter and Kappa in general have come through my dance classes. So you're saying, depends on interpretation, but you're saying there's a possibility that I could interpret that in such a way to say that I could write off my membership dues.
Yeah, I take, Eldon Heyman takes that risk every year.
Gotcha.
That's what I would say. It's a risk because it's not really allowed, but I part of my membership in the fraternity. I do that. I solicit business. I wouldn't be in front of the brothers on a monthly basis soliciting business if I wasn't a member. I wouldn't be able to do it.
Gotcha.
But again, it's one of those risky, it's one of those borderline areas. And another thing, so on my pick.
All right, thanks.
Brother Heyman, I think you kind of froze up on us, or did I freeze up?
Cut out, yeah.
Can y'all hear me? Or the people online, can y'all hear me?
Yeah, I can.
Yes, we can.
Yes, we can hear you.
Okay, yeah, he just came out. Hopefully he'll work his way back in. For some of the brothers that have just worked their way in, we have gone through the first 4 questions. We were just talking about nonprofit organizations, what do nonprofits have to report on taxes, and he just kind of gave us a pretty good breakdown of just like their general information of the top 5 people who get paid. It's public information. And interesting note, I didn't know the NFL was a nonprofit organization. So like that was a small example of what he was talking about in relation to nonprofit organizations. So as he's like kind of working himself back in, I'm not sure what happened with the internet over there. We're gonna finish off with that last question, which is what are the pros and cons of having employees while filing the business taxes for your company. So just give it a minute or so to see if he can work his way back in here.
Hey, Brother Clary.
Yes, sir.
I just want to make a statement for the record. Brothers, I'm about to start a brand new hand dance class next Monday. And I wouldn't be able to tell you that if I wasn't a member of Kappa Alpha Psi and being on this call. So conducting business. Thank you very much.
Not a problem. Make sure that you if you have a link or something like that, you can put that in this group chat, and people can click on that link if they like, or I think it's a copy and paste. I don't know if links can be clicked on the group chat in Zoom. But yeah, and also obviously make sure you make that announcement at the chapter meeting if you're going to be there. At the at the end of the chapter meeting for brothers that are interested.
Sure.
Now, I guess I see you all are recording. Will this recording be available to us, or is that just to one specific person? They got to send it out. How does that work?
Yeah, this recording will be available. As soon as I'm done, obviously I'm going to put it together. It's gonna be on a YouTube that I gonna send out to the chapter, but I'm also going to
My
put it
internet
in the Help the
went
Wellness
crazy.
Got it.
Got you. Yeah, it's all good. Yeah. We were just kind of catching everybody up who just logged in. So ultimately we're on the last question anyways, Brother Heyman. So as you can see, what would be the pros and cons of having employees while filing business taxes? I feel like having an employee, there is a level of benefit. I'm not sure if you get. I feel like you get something back on your taxes, but I don't know. You can clarify that for me, for us.
Well, it's I mean, it's a write-off.
Right off. That's what I was thinking. Yeah.
I mean, that's really it's just a write-off on your business. There's a lot to go into that too. A lot of companies. So an employee, you're supposed to, withhold taxes, pay unemployment, pay workers' compensation insurance, and all of that stuff. So all of that stuff is a write-off on the business. Where I see a lot of small business get in trouble is they will withhold the taxes from their employees, but they won't send those payments to the government. And then they get in trouble. And then other ways, people hire people that they say are employees, but they treat them like consultants, where those individuals are responsible to pay their own, withhold and pay their own taxes, which could end up being an IRS and a labor issue. So, I mean, pros and cons.
How would somebody resolve that?
Pay the taxes. So I have a client that has a pretty nice sized business, and they were paying people that were actually employees as consultants, and they had to go back and pay Social Security and Medicare taxes for those people and convert them to regular employees.
So they were doing 1099s as opposed to doing what is it called?
They were paying them 1099 versus W-2. Yes. So I mean, that's labor and IRS issues right there.
So I guess what would trigger that? Would that be from the IRS side? Would that be from the client side? Like, what would be the trigger of that occurring? Or it's like them finding that out and saying, "Hey, we need to go do this now."
So I really don't know how they found out. This is a new client of mine, but it could have been, these individuals continuously getting 1099s year after year after year, filing their taxes, and then they, find out, well, why are these people 1099 people, and they getting large sums of money from a company, from the same company every year? That might have triggered it. I really don't know. Or it might have been
that the company may have had a contract with the government agency, and the requirement for the contract is everybody that works on this contract is supposed to be an employee. But when you submitting your paperwork to the government to get paid or whatever paperwork it is, and they see that you don't have any employees, that may have triggered it.
That makes sense.
Right.
Yeah.
And I was gonna say, okay. If it's then yeah.
Yeah. People have to file their 1099s one way or another, or the
Right.
W-2 or another. So
Yeah.
I'm sure that could be that could probably be a trigger.
Yeah, and when you get in these government contracts, there are requirements that you must follow. I mean, you may have everybody that works on this contract has to be an employee. Everybody has to get certain number of vacation days. Everybody has to get health insurance. Everybody has to get, and if that's what your contract says you have to do, and then you're reporting to the government, and none of that stuff is showing up on your reporting to the government, that could trigger that could trigger another issue.
Okay. That very quality information. Any other further questions? For some, I mean, for some of the brothers that I know that just kind of came in a little bit late. Obviously, as you can see, we reviewed all 5 of these questions. For the most part, we're kind of close on time. We're actually at time right now, but does anybody have any kind of further questions about what we've already talked about?
I'm gonna have to go back and look at your YouTube because I had to come in a little bit later, but because I have a single member LLC that I know I'm gonna end up having to file for this year since I only got a few days anyway, or otherwise I'm gonna do the extension. But I guess the selfless plug or shameless plug, just like the other brothers, I am currently starting a another LLC here probably in the next month or two. I'm going to start buying apartment buildings with investors. So I'll bring that to you guys and you fellas because I'm a member of the fraternity, and I can actually bring that about and try and see if we can't get something started. Why not share the wealth versus trying to just keep it together for yourself? So,
Hey, brother Burks, I just listed a 4-unit in Southeast.
oh really?
I'm an agent also,
Okay. Oh, good stuff.
so I just listed a 4-unit in Southeast.
Got it.
One,
That's say closed mouths don't get fed, so I'm opening mine.
119 53rd Street Southeast.
Okay. 11953rd. Got it. Appreciate that, brother.
Yeah, I mean, definitely, Brother Burks, definitely, bounce some ideas off of Brother Heyman, especially with his expertise. One, obviously, in tax services. As you kind of work your way into that new game, obviously, Brother Heyman has had multiple experiences with this, so that's kind of what this virtual power hour is about. Outside of understanding business taxes, I kind of was expecting somebody else other than Brother Heyman. But yeah, obviously he has his business. I want to make sure that you all talk to him, and I'll maybe even schedule some services, maybe become a client of his with your own personal business, because it's very important to have somebody on your side who has worked with this kind of thing for multiple years. But even, for you, once again, Brother Burks, if you are kind of diving into this new realm, real estate, and you have Brother Heyman right here, pick his brain and, maybe sign up as a client for him to kind of have a better idea of how to approach this kind of new realm that you're going into.
Yeah, no,
And
absolutely. And I also am a tax preparer, but I've been
Oh,
doing
well,
it for
yeah.
like 6 years now. But I haven't had to do it personally for the LLC, for a single member LLC. Done it for S Corp and C Corps and regular Schedule Cs. And so it's like, all right, cool. But just want to pick your brain. I was Just trying.
This is
I don't know.
this is for a single member as a sole proprietor.
Say it again.
It's the same filing
Same. Yeah.
as a sole proprietor.
Yeah. The single member one. Yeah.
Yeah. So what I didn't mention is S corp, regular corp, and multi-member LLC. Their filing date is March 15th. The deadline, March
Yep.
5th.
It already passed. Yeah.
Yeah.
You would have had to file your extension, but yeah, it's always a month before. So yeah.
So they can get out the K1s to the members.
Yeah, that makes sense.
All right.
Well, if we don't have any other further questions, so once again, for the brothers that came in a little bit late, this recording is going to be online on YouTube. I'll make sure that the chapter has an opportunity to see it. There's also the other virtual power hour recordings from the personal tax one that we had recently to or the most recent one to the real estate financial fitness power hour to even the estate tax, not estate tax, to the estate planning virtual power hour. So once again, I'll be able to send this link out. Hopefully you all can also get a chance to take a look at the past financial fitness virtual power hours. I want to thank you all for taking y'all's time. Brother Heyman, thank you for giving us your time and expertise and all of this. And once again, this is what we're about for the Health and Wellness Committee. I want to make sure that that we are more than just physical health and or mental health. Your overall health and wellness also incorporates your financial health, and so that's what we're here for. So there's no other questions. I will go ahead and close off this meeting, and I hope everybody has a fantastic evening.
All right. Thank you.
No
Thanks.
problem.
Do the same. Yo.
Thank you, brothers.
Yo, brothers.